Locking a loan. What does that mean to lock your loan? Here we go. So during the pre-approval process, all of this time as you've been thinking about buying and getting ready to purchase, the market has been adjusting, and we've gotten updated rates every single morning as the market adjusts. Now that you are under contract, we can lock in the loan, or rather, once you're under contract, we can lock in the loan. Part of why you can't lock beforehand is because the lock is attached to the property address. So we need to identify your property, and then we can lock in. And at the time of locking, essentially, you are promising the lender that your situation, your financial picture, will remain the same for a finite period of time between locking and closing. And the lender is saying that your rate and fee will not change, even though the market continues to change during that same time. That's what locking your loan is. Now, things to keep in mind, like when would a lock change is a common question. So here's an example. Let's say we lock in your loan with 20% down. And then you're thinking about, oh, I'd really like to do the floors right away. Maybe I want to paint, and I really want to keep some additional funds set aside. You might still qualify with, say, 15% down, but then that's going to impact the lock because we locked you with 20% down. So something changes, that impacts the lock. Now, the lock is for a certain period of time. So let's say you get under contract and you have a close date of the 15th of the month. Something comes up, whether it be on your end or the seller's end, and that date is delayed. We're going to need to extend the lock, depending on the original lock date. They're locked for typically 20 or 30 days, sometimes 45 days. So we will need to extend the lock to cover your close date, and those lock extensions can be costly. They are per day and will depend on the loan amount. So if that comes up, then you can expect there to be a lock extension fee. If rates go up during your lock period, you don't need to worry about it. You are all set. If rates come down during your lock period, most likely it's just the risk you took by locking, and you are going to still get the rate and fees that you locked in at. If in some extreme examples, when the market just has a huge change, sometimes we can go back and do some renegotiation. But generally speaking, once you're locked, that is what you're getting. It's kind of like when you call your financial advisor and say you want to buy stock, you're buying that stock at the price on that day. And you can't go back and renegotiate after you purchase it later. Same kind of concept. That's the overview of locks. If you have questions about your situation, please do reach out. We're always happy to help. Talk to you soon.